What's up, everybody? It is the afternoon. I'm in Florida today, and I'm interviewing Gracie Morrow now for the second time. Gracie, you're coming to us live out of Dallas, Texas?
Yes, I am.
Good. Well, thank you for making time. I think this is going to be a very enlightening call. I think you have invented a new strategy and a new way to use Mortgage Coach. Since our presentation on stage at the Mortgage Collaborative last week, I've had a lot of people reach out saying they really love what you're doing. And in preparation of this call, I sent the link to a number of some of America's best mortgage advisors. And they were all like, this is really smart. Like, everybody loves it. And so you've got some very elite top performers watching this call. So I'm excited about it. Could you, just because this is the first time I've interviewed you for the actual Mortgage Coach channel, would you mind just sharing a little bit about yourself, what market you're in, a little bit about your mortgage practice for everyone?
Absolutely. Well, first of all, thank you so much for inviting me here. I'm super grateful for the opportunity. Anytime that I can give back to our mortgage community, because I've taken so much from you all. I am in the Dallas market, has been in the mortgage industry for close to 8 years. Started my mortgage industry or career with a big national bank and didn't really like their process, didn't like the structure. So I moved to another independent mortgage company. Now I own my own mortgage branch and have been doing my own mortgage branch practice for the last almost 4 years now.
Good. Well, congratulations. You're doing well. Now you are a branch manager and a producer. What kind of loan volume are you doing?
So we closed close to 70 million last year. Majority of those closed in-house, and we had some non-QM opportunities that help people. That was a little bit unique situation. I have fairly a decent team. We're absolutely looking to grow. There's a lot of industry leader that I look up to every single day and try to learn their team setup, their flow. So it's just that, you reach 100 million, and after that, you want to reach 150 million. After that, you want to reach 200 million. My goal has always not just to do a lot of loans, is to provide the right education to our consumers, to our partners, but also when you're running a mortgage practice, I want to empower our team members to train more new loan officers, to bring more new people to our industry, to make our industry better and more meaningful, and provide that really legendary work for everyone.
I love your mission, and when everyone sees how you're using Mortgage Coach and how you're bringing advice to the market, I think they're going to be pretty impressed. So let's get a little lay of the land before we do this all-in-one pre-approval experience, which, trust me, everyone watching this, unless you were one of the very few people that I texted this to, you've never, at least I have not seen this before. So if you've seen this before, let me know. Maybe I want to interview you, but let's, before we unleash this all-in-one pre-approval, tell us about your marketplace. How much have rates gone up since the beginning of the year? How competitive is it in your marketplace to get an offer accepted? And then kind of tell the story of how you created this new TCA.
Absolutely. So when you're in a market like Dallas, I feel like we're the most competitive market. I'm sure that's not the case, but I definitely feel that way. Just give you some examples. So starting January, our buying season, I feel like it's starting earlier and earlier every year. Last year, we started maybe right after the holidays. This year, we started in the beginning of December. For the last 2 or 3 weekends, our clients been making offers. So I'll just give you some examples, numbers to give everyone the right perspective. I had a client that made an offer for 500,000 on the property for 500,000 and 150,000 over, didn't even get to the top 10 offers. I had another client that made an offer, yes, on a $1 million property, 230,000 over asking, was in the top 5. So here is, the market, not only the price is appreciating extremely fast, but interest rates are going up every single day. So we're really in that like a sandwich situation. Not only you get hit by appreciation, you're also getting hit by the interest rate, and we get stuck in the middle. So when you're in this situation, we got to be very solution driven. And really, like, you have talked so many times, almost on every single one of your interviews, I finish watching your interview by learning price is not going to win the relationship. Price is not going to win more business. Is the solution and advice that you always thinking for other people. And eventually everyone realized that you're always there for them, whatever situation they're in. So because of that mindset, that I'm always looking for how to be creative, how to provide solution that everybody else couldn't or haven't thought about. You got to always think ahead of the curve a little bit, because if you're not, then you're just one of the many. So that's really the market condition and the challenges we're facing.
Well, you're definitely a mortgage coach. You're killing it. So now we set the stage. It's an extremely competitive marketplace that you're in. Interest rates have been going up. You've got this all-in-one pre-approval experience. Describe what it is. Like, what are the problems you're solving? And then whenever you think it's time, show your screen and, kind of walk us through what you got.
Sure. I'll just give everyone a little bit frame of mind why I created this. We started doing a lot of pre-approvals, and we will do the simple pre-approval first, just like everybody else. When we have application, we look at their income, credit, their down payment. Based on what they are applying for on the loan, we go through the mortgage coach. And by the way, that we use mortgage coach presentation on every single client, no exception. Doesn't matter if it's a purchase, or refi, or cash out, second home. So we'll go through the regular presentation. And then in this market, we realize that the clients or the buyer in the situation always have at least 2 or 3, 4 follow-up questions after we have gone through the initial round of presentation. And then not only do they have a ton of questions, because when they are in that spot of making an offer, it's not always the perfect scenario for them. They probably will start looking at a house, $500,000, but they have to increase their price to $550,000 or $600,000, but they're not mentally or financially feel like they're prepared for it. So they will come back to us. Their real estate agent will come back to us. And sometimes you're in that competitive situation that you don't have 5 minutes to think about your situation, your decision. So I just want to prepare. If we're going to war together, this is a partnership. You have your buyer, you have your agent, you have your lender. So all 3 of us are going to war together, and we need to bring all the tools together, because in case the enemy on the other side is giving us something that we're not prepared for, and at least we're picking up this weapon, you're like, hey, we have this in hand and we're ready. So that's the whole purpose of All-in-One. And I think it's extremely meaningful that you also share this strategy with your realtor partners, because if they're not educated on this, you're doing this on your own. You're only giving your client 50% of the benefit of this. So you got to educate your real estate agent, make sure that the real estate agent also understand the process and options that you're giving to your client before they start making offers.
I love it. I love your analogy. We're going to war together. So unveil it, describe this all-in-one, how you've taken it. And it does look like you're pretty active at watching Mortgage Coach YouTube videos. Just in our conversation, it sounds like you've kind of taken some ideas from a lot of different mortgage coaches and you put it into one thing. So by the way, how often do you watch the Mortgage Coach YouTube videos?
I try to time block every Wednesday afternoon from 3 to 5. I try to catch up on all the videos and interviews that you do. And like you said, I'm not claiming that I came out with all the strategies. I did not. The only thing I did is I saw there's a need, and I put all the different options together and combined them. So every single strategy I'm talking about here, if you are a regular visitor on Mortgage Coach interviews, you have heard of them. The only difference is we're putting them together, and then that way, it's a very useful resource for your realtor and your partner, your buyer, to understand what you're all giving them. That's why we call it All-in-One.
Okay. So So by the way, every mortgage coach, time block an hour, time block 2 hours,
Yeah.
once a month, excuse me, once a week, and make sure you're tuned into this channel. Just replace a little bit of your Netflix time, a little bit of your consumption of news and entertainment with, I want to get better. And at Mortgage Coach, it's not about me. It's about top producers like Gracie that are solving problems. And remember, guys, sell how you solve problems. Don't sell your price or your product. Too many loan officers sell the product. The product is rates, fees, how fast you can close a loan, how good you are personally. That's your product. Sell the problems you solve. And so, Gracie, let's show your all-in-one TCA and see how you're solving a lot of problems in today's marketplace.
Perfect.
For home buyers that are looking to buy homes in competitive markets with a rising interest rate. So this is, from what I can tell, I think this is the best thing I've seen. One more ask for any mortgage coach that's watching this, and after you see this, if you're like, oh, that's money, let Gracie know. Give this a like.
Yeah.
That's one way to say that, hey, I got something from this. And if you do copy what she's doing, or you customize it, you personalize it, and you localize it, share below. That's how we all get better together, is if people watch something, they learn, you evolve it, and then play it forward. Share it back in this community, either as a post in our Facebook group or as a comment in chat. So Gracie, let's see it. Share your desktop.
Awesome.
And I'll tell you when I see it. And here we go. Notice that she's got, wait. She's got a cool personally branded photo. She's got a slick, you're branding your team. Make sure you guys, you're intentional about your photo, intentional about your logo. And let's see the all-in-one pre-approval experience.
All right. Yeah, so make sure you're putting your best content information here, because this report is not only going to be viewed by your buyers are going to share with their agent, and I highly recommend to share the same report with your agent as well. So they need to have the best content information. They can contact you, text you on the weekends whenever they're ready to make an offer. So we call it all-in-one, and we explain why we call it all-in-one, because we want to prepare the client, the realtor, all possible scenarios they might face when they're ready to make an offer. I always make my strategy template as someone is currently renting, because I like to show them how much money they're wasting by renting. So this is just a default that I always show. Maybe you're spending $25,000 or $3,000 per month for rent. I'm going to highlight my different options here. So the option number one is a standard one. As a loan originator, when you review that 1003, you've got to be able to provide information why your client came to you for. If they're looking to purchase a $600,000 with 10% down payment, you always want to give them what they ask first. Psychologically, people have more trust in you because you're not trying to sell them something they didn't even ask. So I would put that as an option number one. The option number two is based on their application, because a lot of people, they think that they want to purchase a
Gracie,
$600,000 house.
If you could uncheck number one, just click on that so that it would just be easier for me to track it. Is it turn it off and turn it on, and then remember, guys, if you're not using Mortgage Coach Live, this is a feature where if you're following the link, like I have the link on my desktop right now, and I'm actually following along with Gracie. So it changes. Make sure you know how to use Mortgage Coach Live feature. Anyways, keep going, Gracie. Okay.
So option number two is based on their application, what I think that the maximum purchase price will be for them, based on my professional opinion. It could be based on their income, based on their down payment. You gotta make sure that you check all those boxes. It's not just the DTI, because when they increase that purchase price, they will also require a larger down payment. Option number three, this is what we talked about multiple times, Dave, in our community. It's a gift. Last year, a lot of top producers have shared this strategy with everyone. It's called appraisal gap protection. If you don't know about this, reach out to me, reach out to Dave, or simply go back to some of the videos that the top producers
We lost you, Gracie. Hey, Gracie, we can't hear you. Gracie. Go ahead and try it again. Oh, yeah, I don't hear you. Gracie. Hey, Gracie, I'm not hearing you. Just FYI, we lost connection with you. Testing, testing. If anybody's watching this on Facebook, just confirm that it is not me. But I'm pretty sure it's not me, Gracie. Yep, it's not me.
I don't know what happened to the
Oh,
audio.
there you are. You're back.
Yes,
You're back.
sorry. So
No worries. It's all good.
what can we do? Do
No,
we need
just-
to?
No. I think you were on the appraisal gap, so maybe just start over with this cost of waiting. Make sure we know what we're looking at. I think we got the appraisal gap.
Okay, are we able to piece the video together?
Oh yeah, it's fine. Don't worry about that.
Okay.
And I like doing things very informal and real world, so all good.
Okay,
like
perfect. Sorry,
15
I don't know what.
seconds.
Maybe we had a bad internet connection here.
Yeah, no problem.
So I'll just start with appraisal gap protection.
Yep.
Okay. So option number 3 here, we have the appraisal gap protection. If you haven't heard about this strategy, I would strongly recommend you to look up the video we talked about, or not, I didn't really talk about this strategy, but a lot of our other top producers in the mortgage coach community taught us about the mortgage appraisal gap protection. This is a way that if the house doesn't come in, then
That was my bad. Keep going.
we can shoot some behind the scene here. We have enough today.
I was commenting on someone that asked a question in comments. But go ahead.
That's all right. So I'll start with the appraisal gap protection.
Well, you don't have to start over. I mean, I think we got it. You could go to the cost of waiting now. Yeah.
Okay. So then the option number 4 is waiting for 6 months. This is if your buyer get nervous, they don't want to continue the property search process anymore. And then you can clearly show them with the market appreciation, the value is going to continue to go up. Then the interest rate most likely will go up. So then you can see the monthly payment and cash to close difference. So overall, I just want to show you guys, here are the 4 options that I include in this all-in-one pre-approval experience. So we really cover all bases of what they came here for, what maximum they can approve for, if the house doesn't appraise, what type of protection we have for them, and if they decide not to purchase in this market, what type of financial loss they might encounter in 6 months.
So a couple things I want to make sure everybody got. So I mean, I like this because it, someone applies, it shows them what they qualify for and what it looks for. It shows them their maximum. So you're getting them to look at, let's face it, this market, people are having to push and get to their maximum. And then you're kind of showing a plan B. I do think, there might be a case to show that, that appraisal gap based off their maximum, but I think that's a tailored thing. And then, and then you're showing the cost of waiting, a higher interest rate, it's going up. And there's an argument to say that if someone's going to push that you're going to change it. And then you can change all this on the fly when you're talking to them. And then I also want to remind people, you could go from 4 options to 3 options, where you uncheck. So you're kind of like, hey, I'm showing you, and you could get a family on the phone and go, okay, column 1. And you've got TCA filled out. And then once you've explained it to them, you click and you show column 2, 3, and then column 4. So I just want people to realize when we do this training, we're showing all, really 5 options, rent versus 5 options. But when you're having that conversation with the client, you could tailor it. And it looks like you know exactly what to do. She's showing you how to do that feature where she just unchecked option 4, and now the family's only going to see those. I also want to remind you, you don't necessarily need to do this with a rent. You know, you could just do a straight regular TCA and not show rent versus those. Clearly, if it's a first-time home buyer and they're renting, you know, start with the rent TCA. So put questions down below. Let's go to the bottom. I want to look at some of the long-term impacts.
Sure.
You know, want to remind folks, depending on how you're trying to serve this client, you know, it's not only showing the monthly difference, the transaction cost different, it's showing different windows of time. So it looks like you're showing it in 60-month increments, and you're showing it in 15 years. I think that's super good generic. One loan officer that I forwarded this to wanted to know, what assumptions are you using for the cost of waiting? Are you getting those assumptions from them? Are you using some data sources like Keep It Current Matters? What are your default data sources to do the cost of waiting?
I'm using my local data because I know that we're on that 10 or 15% appreciation year over year. And this year so far it's been higher than the 10 to 15%. So, and also it depends on the county and also the city, the neighborhood. I'm pretty familiar with small pockets neighborhood. A lot of my clients are buying, and I can get a little bit more aggressive. But when I'm working with a client that I'm not 100% familiar with the appreciation, I like to use something more generic.
Okay, cool. And then also make note, guys, she's doing 6 months. I like that. She's showing a really, you know, kind of reasonable short-term period. This isn't like 1 year, 2 years. This is like, hey, what might it look like in 6 months? And you know what? You may, you know, with some buyers want to make that 3 months. Hey, look what waiting 3 months might cost. Also recommend you consider getting assumptions from the client. Like, you might start with your assumptions, and then you might go, well, hey, let's put in your assumption. So I know you have, well, first of all, do you have anything else to say on this one before we show the next one?
One thing that I was going to point out is just make sure that, you know, the appraisal gap strategy is something that your customer is not going to be able to see what you put in as the appraised value. So when you have that conversation, if you think the house, they make an offer for 600,000 and have a chance that they have to make 10% over, let's make sure that the value might only be 10% less. So include that conversation, because this sometimes can be confusing. And I just always point out the ugly, the truth when I have that conversation, so they're on the same page.
Okay, good pro move. So what is the other, you have a, you know, I asked her like, hey, what are your hot TCAs in this market? She started with this one, which I think is an invention in the community. What's the next one you got?
So the next one I got is called One-Step Move Up. We have a lot of clients, most of people that bought their house in the last 5 to 10 years, they all feel like all of a sudden they're equity rich. Everyone is sitting on 200,000, 300,000, 400,000 equity. And with COVID lifestyle change, a lot of people are thinking about selling their house and move up or move far away or improve or upgrade their situation. I created this presentation called a one-step move up, which means that when you want to sell your house eventually, but you don't want to have to make a contingent offer, you want to try to
could you show that TCA while you're talking?
Yeah,
just so we
absolutely.
have it.
Sorry about that. Here we go.
No problem. I just want to be tracking what you. So the one-step move up, which by the way, I talk all the time how in 2021 nothing won more than equity. So I'm going to highly recommend it. Every mortgage coach has a move up TCA, and you have a first-time home buyer TCA. And this is a meeting you should be having with every agent you have right now. Anyways, keep going.
Okay, so the purpose of this is to actually have a meaningful conversation with someone that you maybe have helped 5 or 6 years ago, and you know their current market value, you know how much their current mortgage balance. I don't know if anyone have done this before, and maybe this is something that Dave can confirm. What I am doing here, this is behind the scene, not a presentation mode, is I am actually calculating the estimated proceeds from selling their current home. And how I'm doing here is I'm putting the property value, and then under the closing cost tab, I'm including the realtor commission, which is 6% of this. I'm trying to click on this link here. Give me 1 second. It's not working.
Yeah, and I see where you're going with this. I just want to share with the community while Gracie is figuring that out. Just start talking when you're ready again, Gracie. But you could, she's showing a recast. So, hey, let's move up and recast, you know, she's figuring out what their proceeds are and then recasting it. But you could have also shown another column where it's not a recast, but hey, let's take those proceeds and invest them with a financial advisor at 5 or 6%, and kind of, you know, it makes a great case for moving up. And then it gives the family, hey, do you want to recast and get the lowest payment, or do you want to invest and have the fastest freedom point? And, you know, just another, do you ever do that, by the way, Gracie?
I do. I do that quite often.
Cool.
Yes. So right here, you guys can see, highlight this part, estimated proceeds from selling your current home. And you'll be able to show the actual closing cost here. And it's going to be listed APR, but I also explained to my client that this is not APR cost. I'm just giving you estimate calculation, and I use 6% of the value towards the realtor commission, and then 2,500 right here is your potential title fee, attorney fee. So you have a negative number, which is money coming back to them, about 239,000. Then this option is how much they can afford with the minimum down payment without having to sell their current house first. So let's say they want to move from a $615,000 house to a $650,000 with only 5% down payment. Here is your estimated cash to close. And what I also do is like the scenario Dave just shared is the recast. A lot of people don't want to carry another big mortgage after they feel like they have built so much equity in their current house. They want to be able to eventually apply the proceeds towards the new house and still keep their monthly payment low. So then we can show them the recast option, which is after we have closed the loan, if they're getting about 239,000 proceeds, then we can use a portion of that. So in this scenario, I'm only using 230,000 out of 240 to apply to their loan, reduce the loan amount from 617 to 420, then we're able to lower their monthly payment quite a bit. So when everyone is focusing on this move up option, what they should really focus on the financial impact is after recast. That is going to be your future monthly payment going forward.
Hey, I'm going to put you on the spot. Let's go into the advice engine, into this particular TCA, and let's use the copy feature and create a fourth screen. And instead of recast, let's take, 200 and whatever thousand and invest it. And let's be conservative, like at 5%. So you'll notice that she's going copy from that, and let's just estimate, put a generic cost in there. This does not have to be perfect. I just want people to see the concept of what we're doing.
Yeah.
And so now we've got a new program. Little internet slow time,
And I think this is because we are going through a storm.
Yeah, we're in Dallas right now, guys.
We're in Dallas. Yeah. And normally
it's pretty quick.
It's very quick. I think just because of internet connection. So let me try again.
Yeah, we'll try it one more time, and if it's too slow, then we will. We'll just put a TCA. But guys, it's going to be shocking when you see how much we can increase the net worth of that family's loan. Yeah, let's chalk it up to internet speed not being what we need in Dallas right now. Also, Amber Kovark has an incredible move up analysis where it's kind of a standard move for Amber, where she's always going, here's your current home, here's renting, here's recast, and here's asset accumulation. Also, she'll do like a refi analysis where she'll say, hey, column A is rate and term refi, column B is buy the new home and recast, and the next column is, oh, it looks like, do we get it?
It worked.
We got it?
Yeah.
Okay, so now let's go ahead and change, instead of that big down payment, let's kind of make it the small down payment. And then let's, take that big chunk of recast and apply it to, and let's do 5%. 6% I think is a good number, but I always, unless the consumer wants you to put in a bigger number, and if they start pushing past 6, I would, like, hey, okay, you're getting 8%, but let's just see it 6. So you always want to like make what you're giving them as conservative as it can be. So.
Okay, so 6% down payment?
Oh, no. The same down payment. I'm talking about 6% rate of return.
Oh, okay.
Yeah, sorry, whatever, yeah, 5% down payment. Obviously their payment is gonna go higher. That's okay. And then let's go, when you get to the analysis screen, we'll put that 200 and whatever thousand. Okay, notice she's clicking adjust reinvestment strategy.
Right.
You're learning something right here, guys. And now you're not going to pay it down there. You're going to put it with a financial planner at 5%.
Right. So we're doing, sorry, my computer screen's a little small, investment balance.
No, but put it on the far in option 4.
There you go.
Rate 5%. And then let's put that one-time cash payment right there, that top one, wherever it is. Yeah, investment balance right there. Let's make that, what is it, 230 some odd thousand?
Yeah.
Let's just say 230. This will make the point, guys.
Yeah.
And I'm going to have you make one more adjustment before we show the new TCA.
Okay.
Guys, this is real time. You go ahead and close that out. And then I'm going to have close that. Now go to the bottom. Instead of showing long-term interest, change that to net worth real quick. Right there. Yep, change that to net worth. Now watch this, guys. Look at that. Wait, stop right there. The net worth in 15 years goes to $1.2 million versus 900. So we're talking about a $350,000 increase in net worth, and we increase the liquidity. So guys, this is a realtor lunch and learn. If you have questions, put them down below. Anything else you want to share on this strategy?
No, I think this is something that you really need to be talking with your real estate agent, because everyone in the real estate market is struggling with listings, and realtors want to get listings and they know that listing is the fuel of their business. But in this market, if you're not able to find your buyer a home, no one can get opportunity to list anyone's house. So this is super important strategy. I will totally do lunch and learn. And if you want to be different, if you want to bring value to a real estate agent, this is how you do it.
Love it. We'll stop sharing your screen. Gracie, you're incredibly creative. You did two things. I'd never seen the all-in-one. And then the way you did the rent, or not the rent versus own, but the move up, where you use that first column and you showed the transaction. I haven't seen, it's a different twist to the move ups I've seen. So kudos to you.
Thank you.
Any closing thoughts for the mortgage coach community before we wrap up this session?
I would just say in this market, this year is going to be tough. So I always focus on 4 P's. One is your people. So take care of your team members, take care of your customer, your partners. The second P is process. Mortgage coach should be in your process. It should be in every single conversation, and it should be your entire mortgage pre-approval process. The number 3 is protection. So in this market, everyone is scared. So how do you provide protection to your client? It's going to set you apart. And the number 4 is your products. So get really creative in different programs and products you can, get your hands on. So I'm going to be living by the 4 P's this year, and hopefully that helps you guys.
I love the 4 Ps. Anyways, thank you so much, Gracie. You're a gift to the community. You're a gift to your company. Thank you for helping us grow all the success we have at Thrive. You're a great leader over there. You and Denise Donahue and many other great leaders at that company. So community, if you are not already following and subscribing to the Mortgage Coach YouTube channel, guys, this is the year to do it. Our views are up over 30% from last year, and those were up 30% from the year before. So the channel is growing. We're trying to get to 20,000 subscribers. So share this with your mortgage friends, subscribe so that you get alerts when the new videos get put in there. If you got a takeaway from it, give it a like. And remember, let's play this forward. I want to see more of what's your all-in-one pre-approval and mortgage coach. What is your move up TCA? I think those are two of the biggest and most important strategies in mortgage coach land right now. So I want to see different variations of this from the community. If you think I should interview you, let me know in comments. And if you know someone I should interview, let me know in comments. So Gracie, have a wonderful day. Thank you for your time. Thank you for being on 2 stages in 2 weeks with me. I am super grateful for that.
I'm grateful too. Thank you so much for your time, Dave.